one thing I do notice with the everything code is, yes, there's a lot of people who kind of understand it, but there's a lot of people who are in total disbelief. People just say it can't be this easy. Like, maybe it is. Maybe it is. And if it's not until everybody believes in it that then it's more likely to be super wrong.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Raoul Pal talks about where we're at in the macro crypto cycle and what the future of digital assets investing looks like. They cover airdrops, liquidity factors, how to manage information flow, and so much more.
Right. Hearing the opposite opinions, most of them are just not very grounded opinions. They tend to be from, the peanut gallery about, well, inflation's coming back and it's going to be the 70s over again or whatever. Then now you can kind of discount all of that stuff unless somebody has a reasonable argument in a way that why liquidity wouldn't come back, how they could allow the debt to refinance. The only way for me is somehow GDP growth has to magically, trend rate has to change. And that can't happen, I don't think, till about 2030 when the AI and, the infinite population of AI and robots kicks in and productivity from lower electricity prices and all of this. I'm like, unless you could show me one of those things that's going to change the game right now, I can't see it changing. This is why I'm really passionate about where the future of social tokens and digital network states and, tokenized smaller economies, because that creates community and capital as the same thing. And they tend to be different. I'm seeing this blending of community and capital everywhere. Whether it's GameStop, in the last cycle, or even a bit this cycle, or whether it's crypto overall. But I do think that social tokens in whatever format they end up being, we're still testing them between NFTs and memes and all this stuff. It's all around the same idea, but somehow we're going to tokenize economies better, small economies that you can participate in, and now you've got capital in them. Before you just couldn't do that. But the issue is a lot of what is quality is social consensus. It's like you don't really know.
That's true.
I was having a great conversation with Meow from Jupiter, and we were talking about the fact that utility, in many cases, is the least valuable part of anything. If you think attention is everything, and the more attention you get, the more status you get. If you think about the wine industry, Louis Vuitton handbags, all luxury goods, right? Their utility is actually very small. I can carry my lipstick and hairbrush and money in a bag. The difference between bag pricing is attention and status.
Totally.
And so it becomes very difficult in how to think about these things in this new world. Now, it's easy on the layer ones because there's metrics. We talked about this before. But the further out you go, the less you have anything to measure this on outside of social behavior and somehow measuring it. And does it matter to somebody? I don't know. There's just something in understanding this. And we've seen it with some of the more interesting memes that have tried to have utility. The moment they do it, you can value them on cash flows, and you just nuke the value because it's like, you shouldn't do that.
You can't do it. No.
But attention, unlike a cash flowing business, cash flowing businesses, something you can value can drive investment over time. Means it's just as long, or whatever it is, it's just as long as you can capture that attention. It's really hard to do.
Bitcoin could jump to $110,000 on its next major rally, despite concerns of lower highs and lower lows, forming as a pattern on the BTC price chart, according to crypto traders. The next leg is likely to bring Bitcoin to $110,000. Founder of MN Capital Michael Van de Poppe wrote in a July 17 post on X, It comes while other traders point out that Bitcoin is failing to reach previous highs, with each new high falling short of the last. It should be noted that the sequence of lower highs and lower lows continues despite the halving. Despite the ETF, despite the hype, veteran trader and analyst Peter Brandt stated in a July 17 post on X. Van de Poppe doesn't seem as concerned, linking the volatile price of Bitcoin in recent times to the struggles faced by Bitcoin miners due to the rising operational costs and reduced mining rewards following the halving in April. The true hashrate drawdown at its last low on July 1st was as heavy as during the FTX collapse, Van de Poppe stated. Since Bitcoin reached its all-time high of $73,679 on March 13, it has breached the $71,000 mark several times but has yet to reach its record price again. There were also 9 consecutive days in July when Bitcoin failed to breach above $60,000, which hadn't happened since February 28. Bitcoin's recent low of $54,274 on July 5 was the lowest price the asset faced in 4 months, according to CoinMarketCap. While the next leg has an ambiguous timeline, other analysts are offering slightly more certainty regarding when Bitcoin will breach the $100,000 mark. Riot Platform's Vice President of Research Pierre Rochard believes it could happen at some point before July 2025. Bitcoin could go to $100,000 over the next 12 months, Rochard wrote in a July 17X post. Other traders are more conservative. Crypto trader and investor Marco Johanning suggests Bitcoin will not go to $100,000, at least not this time, offering a prediction nearly 19% lower. The new low at 53.4 changes the targets for Bitcoin to 81 core 94, he added.
So I figured out the easiest way to play all of this, including the move from 2.5 trillion to 100 trillion, the largest wealth in history. I just sat down and thought this thing through. I was at Beeple's studio turn of the year, and all of the big NFT people, artists were there. And so were MoMA, and so were Sotheby's, and there was just a bunch of trad art people. And you could see, firstly, I realized I was teaching them about macro, how it drives the NFT prices, because they're artists. They're like, why is my NFT prices down? I said, it's nothing to do with you. It's the same as Rolex watches, the same with fine wines. It's driven by the business cycle, blah, blah, blah. They're like, thank you.
And that, Raoul.
So, because they were so worried about it. But what I learned from then was realizing how small a group of people really own the culture of the internet in that kind of way, in art. And that it's basically the art world split into two. There's the generative artists. So that probably started with cadenzas, ringers, and autoglyphs being the primary example. There's punks, they're just punks. And then there's ex-copy and Beeple who are culture. And when you speak to Beeple, in fact, you speak to everybody in the space, they're like, well, ex-copy was there first. And if you think of those two, they've been commenting on social culture, the culture of the internet, the culture of crypto from the beginning. I mean, Beeple turns up every fucking day to put a bow around the internet and say, good night, everyone. Here's my comment of the day through art, right? Brilliant. Now, some of these you don't like, some of you like, but every single day he's putting a bow on the internet and wishing everybody good night. And I suddenly realized, okay, if you're going to generate a lot of wealth, I've seen this before because a lot of my ex-colleagues were the big hedge fund managers who owned the big hedge fund businesses. They became obscenely rich. What do they buy? Property and art. All of them. Many of them have got multi-billion-dollar art collections. Then I remember the Russians coming in after the Berlin Wall came down. They started really getting wealthy in the early 2000s. They bought everything in the art market, everything property market. Then we saw it with the Chinese, we saw it with the Indians, we saw it with the Silicon Valley guys. They've all done the same train. And we're going to do that all over again. And what's so interesting is humans like to take a snapshot of culture from when the magic was happening. And we all know, Chris, that the magic is happening now. It has been for a few years because we're all 1 degree of separation from each other. And that goes over time. And
right.
So anybody who makes a lot of money is likely to celebrate this with high-end NFTs, particularly the culturally relevant ones, because it captures this essence. And then once you rinse $100 trillion of capital through, they just trade at infinite prices.
On the other hand, supportive economic data from the United States particularly increased Wall Street bets on a potential interest rate cut in September, could help boost Bitcoin's bullish outlook during its ongoing recovery. According to the CME FedWatch tool, as of July 17, futures rate traders have increased their expectations for a 25 basis point rate cut in September to approximately 93.5%, up from 67.3% 10 days ago. This shift toward a more dovish outlook has gained momentum following an encouraging consumer price index print on July 11, widely viewed as bullish for Bitcoin and other risk assets. BTC's gains also coincide with $1.347 billion worth of weekly inflows into Bitcoin-based investment funds, including U.S.-based spot Bitcoin exchange-traded funds, ETF. Data from Farsight Investors reveals that 11 U.S. spot Bitcoin ETF reported $422.5 million in daily net inflows on July 16, bringing the cumulative net inflows for the last 2 days to $723.4 billion. The supportive macroeconomic catalysts and inflows into Bitcoin-based funds provide a positive fundamental backdrop, reducing the likelihood of BTC price crashing again in the short term. From a technical point of view, Bitcoin price is fighting resistance from the $66,000 level. Note that when the price breached this level on June 18, it recorded 20% losses to $53,500, suggesting that the bears are aggressively defending this zone. Bitcoin bulls were required to produce a decisive daily candlestick close above this level to sustain the recovery. Conversely, failure to flip $66,000 into support could cause the price to drop lower, with the accompanying long position liquidations pulling the price towards $62,000. Data from CoinGlass showed thick liquidity asks building up above $66,000, reinforcing the importance of the resistance around this area. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.